Good afternoon, everyone. Welcome to Closing Comments here on January 12th. Let's jump right into our charts and see what happened in the markets today. First up, we got our February live cattle on the board. We did see a little bit of upside here today across this live cattle market. Prices opening up off that opening range and seeing a nice strong push higher, briefly poking above our bull pivot there at 235.62. We did see this market kind of settle back late in the day, but we did see good consolidation and good buying activity coming in here right around 235, last week's point of control. Looking like the buyers are reloading and getting primed and ready for a nice move here throughout the rest of the week. Look for the bulls to take today's session and carry some of that momentum into tomorrow's session. Bids above 235.62 should have this market pushing up here towards this prior week's high. Above that 237.5 level should be pretty smooth sailing for the bulls, and they should start coasting up there into the 240s. The uptrend remains intact, and we should see this cattle market keep on pushing higher. Next up, we got our March feeders. This market mostly just hanging out inside of Friday's range. Pretty choppy during the early part of the day. This market just kind of chopping sideways between 354 and 356 throughout the bulk of the day before seeing a nice strong push into the close by the bulls, finishing on the highs of the day. Looking like they're primed and ready here as well to start attacking this prior week's high here between 358.75 and 360. If the bulls are able to keep that momentum rolling from this late part of the day into tomorrow's session, look for them to keep on pushing through these prior week highs, and from there it should be pretty smooth sailing here for this feeder market as well, and get this uptrend moving higher once again. Next overhead target here for the bulls, if they're able to get above this prior week's high, is going to be this overhead gap up here right around 371 is where it's starting. Look for the upside to keep on pushing. This uptrend remains intact. Feeder market looks good and strong. We should see this market keep on pushing higher. Next up, big mover today was this corn market finally. After spending the last couple months range bound here between 435 and 455, we actually saw a nice close beyond the edges here. This market opening up the week right in the middle of this range before today's WASD report added some selling pressure, driving this market through the bottom end of this range, getting anyone who's long over the last couple months to be forced to fold here so as they start taking underwater or start going underwater. Price is breaking down here below 435 and having a nice strong close on heavy volume down here, nearly a quarter lower. Looking like this market should continue lower. Lots of selling pressure here today. We do have an increase in volatility, so look for some wide daily ranges to come from this. We could kind of chop back up inside of today's range, but at the moment, this is some pretty heavy selling pressure, and this should kick off a new downtrend here for this corn market. As long as we're trading below 435, we should see this thing continue drifting lower back towards those contract lows. Looking like we're going to start a new downtrend from here. Look for these corn prices to keep on grinding lower here throughout the rest of the week. And next up, we got our crude oil futures on the board. Today we did see some more upside following in Thursday and Friday's footsteps from last week. We did see this market settle back down here below our bull pivot last week, but seeing some continuation action here today, pushing back above 59. This market getting a close above the 50-day average here is a good sign for the bulls. Going to start triggering a short covering rally here. Look for this market to keep on pushing up here towards 61 to 62. This is going to be the spot where we have some leftover supply that this market is going to want to head back up there towards. This $60 mark has been pretty sticky over the last few months here, so not expecting any huge breaks, but just a little bit of a short covering rally to head back up here into the low 60s should be enough. From there, we'll have to wait and see how this market unfolds, but at the moment, the bulls have this market in their hands, and we should see the upside continue here, start poking up there into the low 60s. If we do see this thing flush back down here below this 50-day moving average and get a close below today's low, look for that downside to continue, but as long as we're trading above 59, we should see the upside continue here in this crude oil market. And next up, equity indexes, all seeing some nice gains here today. This market did see some downside over the weekend, opening lower today, but having a nice strong push all day long. NASDAQ, S&P, and the Dow all picking up some nice ground here today. The Dow within spitting distance of new all-time highs, should be there here in the next couple days. The NASDAQ seeing some nice pressure, continuing to put up here on this 26,000 level, briefly poking above it, and testing that prior week's high. If we get some follow through above last week's high, we should see this tech sector really kick into gear. We should see some buying pressure start to really ramp up. And as we're breaking out of this level, we should see some acceleration in the buying activity and take this NASDAQ back up to new all-time highs. Meanwhile, the S&P is printing a new all-time high up here on the futures at 7,025, keeping this uptrend moving nice and slow, but upside nonetheless. As the NASDAQ is able to clear this 26,000 to 25.9 level, we should see that really put some more buying pressure on this market and carry these other indexes with it as well. The uptrend remains intact, and we should see each of these indexes start pushing up towards now all-time highs. now's a good time to be invested. Stay long and strong. We should have some pretty good upside here to start off the new year. Thank you, everyone, for tuning in. We'll catch you guys tomorrow.